Good morning, everyone. Nice faces looking at me. And for those of you zooming in from your offices at home, welcome to the University of Aruba. I'm Deborah Alexander. I'm the coordinator for the Center for Lifelong Learning. And I'm grateful to have Alice Draghici here with us, giving a presentation on tax. It's a very long title, and I'll leave you get to that. For your questions, as always, please post them via the Zoom Q&A, and general remarks, you can use the chat. We'll try and tape this and have it made available for everyone at a later date on our YouTube channel. It's a short presentation, so let me not speak too much and have Alice give her presentation.
I would like to begin by thanking everybody for being here, and of course to the lovely staff at UA for facilitating this. My name is Alice Draghici. I am a Ph.D. researcher at the Maastricht University Faculty of Law. I'm finishing my Ph.D. in a couple of months. And I'm also a guest lecturer here at UA, where I teach a course about general issues of international and European tax law. Today's session will be about tax law, but it's not going to be about the types of general things that I cover in my course normally. Instead, it's going to be about some very specific and particular challenges that are experienced by policymakers and tax administrations at the current time. How do I remove this? Oh, okay, there we have it. Thank you. So, to start off, I will set out a very basic truism. The way in which businesses are conducted today is very different from the way it used to be in the past. For us as consumers, the way in which we interact with businesses and the goods and services that we consume, and even the manner in which we consume these, is very different now than it was a few generations ago. And you don't need an expert to tell you that the reason behind these changes and developments is related to the emergence of information and communication technologies. Technology is the backbone of the digitalized economy. When the digitalized economy, as we call it, emerged around the 1990s, it was usually defined as an economic system which exists in parallel to the brick and mortar economy or the regular economy. But I would say that today, considering the extent to which technology is used by businesses, it's no longer still appropriate to try to refer to it as existing in parallel to a regular or ordinary economy. In 2013, the Organization for Economic Cooperation and Development, or the OECD, published its first major report discussing the tax challenges posed by the digitalization of economies. And one of the remarks made by the OECD in that report is that the digitalized economy is increasingly becoming the economy itself. So it's less and less appropriate and less feasible to try to ring fence the digitalized economy or to segregate it from the regular economy. Now, technology is clearly everywhere, but the truth of the matter is we rarely take the time to think about the business models behind the digitalized enterprises that we interact with routinely. For me, an explanation of the digitalized economy that I always liked is the one developed by Jordan M. Berry in one of his articles. According to Berry, there are two big phases of the digitalized economy. On the one hand, we have what he refers to as technological innovation, and on the other hand, we have transactional innovation. Technological innovation refers to services and forms of economic activity and business models that only exist thanks to technology. Here you could think about something like cloud computing. So cloud computing allows us to store files and data on remote virtual servers rather than on local drives. And clearly a service like this could not have been possible in the absence of technology. So technological innovation refers to forms of economic activity that only exist because we have a technological infrastructure that underlines their existence. But on the other hand, we also have transactional innovation. And transactional innovation is much less widely discussed than its counterpart. Transactional innovation refers to forms of business and economic activity that have also existed before the advent of digitalization, but which have been changed radically because of digitalization. Here you could think about something like e-commerce, which simply means the possibility of buying goods online. Now, before the internet, it was of course still possible to go to a shop and buy anything you needed, but technology makes it possible for businesses to also sell their goods remotely. I said a second ago that transactional innovation is not really widely discussed. And in my opinion, that's very unfortunate because transactional innovation tells us a lot about how our broader economy functions. Transactional innovation is important because the channels through which we interact are themselves very important and have far-reaching implications. It's possible for us to go to a bookstore to buy a book, but a company like Amazon is able to sell not just books, but any product under the sun from a couple of warehouses around the planet. Transactional innovation essentially allows businesses to reap the benefits of economies of scale. Because of it, companies can access broader markets and reach wider customer bases and diversify their offerings of goods and services and their drivers of economic value. And ultimately, all of this means is that companies can grow faster and be more profitable. Now, transactional innovation is a whole sphere within the digitalized economy. But for today's talk, I will focus on a very specific business model within this realm. And that refers to companies like Uber, Airbnb, or Taskrabbit. These are companies that epitomize what we call the collaborative economy. And I'm sure that everybody here knows what these companies are and how they work. Uber has a platform which allows consumers to connect with other individuals in order to provide private transportation services. Airbnb has a similar platform which allows you to connect with a so-called host when you need a place to stay, for example, on a holiday or a business trip. And Taskrabbit is similar when it comes to household services. So when you need a particular household service done, you can request it through Taskrabbit, and that platform can connect you with a service provider who rendered the relevant service to you. Now, what's interesting about the collaborative economy is the manner in which all transactions are undertaken through it. In all transactions in the collaborative economy, we have three main parties. We have, first of all, a consumer, and that consumer requests a service through a platform. The platform then advances that request to a service provider, and the service provider is the one actually rendering the service itself. So the core of the transaction takes place between the service provider and the consumer, but there is always another party to this transaction, which is the platform that connected them in the first place. And this business model is interesting for a number of reasons. First of all, there is the nature of the services that are provided through these platforms. For us as consumers, it probably makes no difference whether we take an Uber to get from one place to another or if we take a taxi cab. But the one big difference is that a company like Uber is never going to say that they are providing private transportation services. Uber is always going to say that they are a technology company and that their only role is to connect you with a driver. And that driver is the one who provides you with the transportation service independently from Uber itself. The same thing with Airbnb. For you, staying in a hotel or an Airbnb might be all the same, but Airbnb is never going to say that they are a real estate broker. Airbnb will also argue that they are a technology company, and again, that their only role is to connect you as a consumer with another individual who actually provides the service to you. But to me, what's even more interesting about the collaborative economy is the manner in which these service providers like Uber drivers or Airbnb hosts provide services through these platforms. The collaborative economy is premised on the notion of allowing individuals to monetize the capacity of private assets. What this means is that anybody who has a spare room in their house can rent it out on Airbnb and earn income from this. Anybody who has a car can provide Uber rides and earn income from this. So the collaborative economy allows individuals to mobilize private resources and to convert them into assets that they can use to generate income. But Of course, since these individuals earn income from the services that they provide, inevitably, the question becomes, how is this income going to be treated for tax purposes? And the first step to answering this question is to look at the status of the service providers themselves. According to companies like Uber and Airbnb and Taskrabbit, the service providers are independent contractors and not employees. Uber will go to great lengths to argue that your Uber driver is an independent contractor, somebody who is driving you from one place to another at his own risk, in his own name, and on his own behalf. And this is where the problems start for tax purposes. The income tax systems of virtually all countries in the world treat individual taxpayers quite differently from a compliance perspective, depending on whether they are an employee or an independent contractor. When you are an employee, you are seen as earning income by performing work under the risk, control, and supervision of a principal. And that principal is your employer. Employers are very often required to take on certain obligations on behalf of employees. As an employee, when you are paid a salary, your employer takes out a part of the salary and transfers it to the tax administration as a tax payment. So ultimately, what this means is that employees don't have to do much themselves in order to ensure that their tax obligations are fulfilled. But for independent contractors, things are quite different. An independent contractor is seen as earning income by performing activities in an independent manner. He is not seen as working under the control of anybody. So in the eyes of the law, there is no third party between the independent contractor as a taxpayer and the government. There is nobody there who we can see and ask to take on compliance obligations on his behalf. So what this implies is that an independent contractor is expected to report his own income and his own expenses and all other relevant circumstances. And the amount of tax that he pays is determined primarily by reference to information that he reports himself. For an employee, tax compliance is more or less guaranteed because, again, the employee doesn't have to do much to ensure that he's compliant. But for independent contractors, income tax rules rely very heavily on a paradoxical concept that we call voluntary compliance, on this idea that you are responsible for reporting your own income and your own circumstances. But of course, what this means is that effectively, even though this shouldn't be the case, taxpayers enjoy a considerable measure of control over what they will report and how correct that information will be. Unlike employees, independent contractors enjoy a lot of opportunities to escape the net of taxation, even though they shouldn't. Independent contractors are tainted by something that I refer to as a visibility deficit. Because of the nature of their activities, it's very difficult for tax administrations to know what their activities are and how much income they derive from them. So unless the taxpayer reports income, it's hard for the tax administration to know that something had to be reported in the first place. There's also an information asymmetry in the relationship between the taxpayer and the tax administration. The tax administration knows much less about your situation than you do yourself. So when you report something in a tax return, it can sometimes be difficult for the tax administration to ascertain that that information is in fact correct. So because of such factors, independent contractors enjoy a lot of opportunities to misrepresent their economic results. But there can also be situations, of course, where you don't set out to be non-compliant, but end up being so inadvertently. The income tax rules that apply to independent contractors can be quite complex, specifically because they entail this high measure of assuming personal responsibility of what you report. In order to be able to report income and expenses, you are expected to track these in one form or another. And this can entail compliance costs and an environment of laws that taxpayers may not always be familiar with or able to navigate sufficiently well. So in this respect, they can also be inadvertently non-compliant. But of course, the most obvious question is, can we say that platform workers are independent contractors like all others? When you think about a regular independent contractor, you indeed think about somebody who performs activities on a wholly independent basis. You indeed do not see a middleman between that person as a taxpayer and the government or the tax administration. But you can of course ask whether this is entirely true when you think about platform workers. The activities of these individuals are performed for platforms, and these entities, of course, have information about the identities of the service providers, how many transactions they perform, and how much income they earn from these activities. So, of course, inevitably, the question is often raised whether these platforms should participate in the compliance processes of these service providers, and if so, how and to what extent. But before you even think about what steps should be taken, it's also quite obvious to ask, should we care about this problem at all? At the end of the day, we are talking about individuals who perform activities on a relatively small scale. The collaborative economy is an environment of high volume but low value transactions. So in the grand scheme of things, should it matter that these people can be non-compliant? In my opinion, there are some very good reasons why this issue matters. And these reasons also underline why policymakers and tax administrations in practice take this matter quite seriously. In my view, one of the more important general reasons why this aspect is relevant is related to the reliability and integrity of personal income tax systems. I don't need to tell you that the number one objective of every tax is to collect revenue. But the truth of the matter is that some taxes are more effective than others at achieving this. In developed countries like OECD member countries and EU member states, these types of states rely very heavily on personal income taxation in order to mobilize and to collect public revenues. And the reason for this is because such states find it easy to collect this tax. The reason for this is entirely practical in nature. The taxpayers for personal income taxation are individuals, and most individuals in reality are employees. It's very easy to collect tax from an employee because you can rely on the employer as an intermediary. And there's another important factor here as well. Employment is fairly stable. So this means that the basis for assessment for personal income tax is stable itself. When you are an employee, your status will not just change from one day to another. And your income will also be quite stable because most employees are paid on fixed salaries. So these types of considerations make it easy for states to collect personal income taxation. But you could argue that the collaborative economy and the pace at which it is growing is starting to challenge these notions. With the collaborative economy, we have an increasingly larger number of taxpayers who earn income, indeed in small amounts, but on broader and broader scales from activities that are performed in a very decentralized manner. We know from experience that our tax systems are very good at handling broad segments of taxpayers when they earn income in a centralized setting like employment. But we have to ask the question now of whether our systems are equally as effective as capturing broad segments of taxpayers who earn income in a decentralized manner. Another reason why this issue about the taxation of service providers in the collaborative economy is relevant is related to the fact that this topic highlights an area of intersection between questions of tax policy and tax administration. Tax policy is a question about what our tax rules are, what their design is, and tax administration refers to how these rules are managed and applied by governments. Now, if we say that the reason why platform workers don't pay their tax is related to tax policy, we could say that the rules that we have are inappropriate and they fail to accommodate the environment of income generating activity that we have in the collaborative economy. So if we believe this, then the answer should be that we need to adopt new rules which are more compatible with this environment. But we could also ask whether the undertaxation of platform workers is not also something that we can attribute to tax administrations. We can ask whether tax administrations are actually doing enough in order to secure that these taxpayers are compliant. And if we do accept the notion that tax administrations should play a role, then we also need to understand what that role is. Should we expect tax administrations to be more proactive in the manner in which they take enforcement action? Is it reasonable to expect a tax administration to go after taxpayers earning small amounts of income? Or should the role of tax administrations instead be related to facilitating compliance and providing resources to help manage this environment better? But of course, if this issue is indeed relevant, and I do believe it is, the next question to address is, what should we do about it? How should we design a framework to ensure the taxation of platform workers? The first time that this issue was indirectly addressed is in a report by the OECD called Tax Compliance by Design. This report was not focused specifically on issues related to the collaborative economy. It focused on ordinary independent contractors and ordinary small businesses. But the OECD made a lot of remarks in it, which are very relevant to the situation of these taxpayers. One of the things the OECD said is that independent contractors and small businesses enjoyed compliance choices. This is related to the idea that they are expected to report their economic results themselves, and they enjoy a lot of leeway over whether they will report this correctly, and they can leverage the fact that tax administrations often do not have the resources to check the accuracy of what they report. So in the view of the OECD, what should be done is we should remove these compliance choices from the hands of taxpayers. Taxpayers should not enjoy so much control over what they report themselves. According to the OECD, tax rules and tax systems should be designed in a way that is conducive to compliance and that inherently diminishes or limits opportunities for non-compliance. But how does the OECD expect us to do so? Well, the first thing that the OECD recommends is that countries should rely more on intermediaries. With employees, we have the employer as an intermediary with the tax administration. And the OECD is arguing that we should be more creative about this, and we should try to identify more types of situations when there is an intermediary between the taxpayer and the tax administration, even when that taxpayer is an independent contractor. And whenever we have such intermediaries, we should take advantage of that. Another thing that the OECD remarked is that we have a problem related to the nature of compliance frameworks. The process of generating income is functionally segregated from the actual payment of tax. You earn income today by performing activities or services, but you only actually pay tax at the end of a given pre-established legal period. And according to the OECD, this should be changed. So we should remove this functional separation, and we should try to integrate taxable events and taxable activities with the actual payment of tax. And finally, the OECD also notes that tax administrations should play a role, and they should support the management of effective income taxation systems by providing resources that facilitate taxpayers and by supporting the automation of compliance frameworks. But all of this, of course, is very theoretical, and it doesn't tell us much about what is currently being done by states. So what are states really doing in practice to address the taxation of platform workers? Well, a lot of countries have adopted so-called taxpayer engagement and education initiatives. These are soft law approaches, so there's no strict legal basis for them. And what they entail is that platforms like Uber and Airbnb work together with domestic tax administrations in order to draw service providers' attention towards their tax obligations. So platforms are expected to engage these individuals with the tax system by drawing their attention to the fact that, okay, you perform activities and you have tax obligations as a result, so make sure you pay your taxes. And tax administrations are expected to educate these taxpayers by providing information resources and information portals to them with general information about how they should prepare a tax return and what they should report. But of course, the obvious question is this measure sufficient in and of itself? At face value, it's very sweet to say that it's nice to have tax administrations cooperating with these enterprises because we have this cooperative approach there. But at the same time, the mere fact that these taxpayers are given notice that you have to pay your taxes doesn't automatically mean that they will in fact be compliant. Other countries have gone even further, and they have tried to, let's say, simplify their tax rules in order to accommodate the situation of platform workers. But for many countries, the idea of simplifying tax rules meant the introduction of exemptions. When an item of income is exempt from tax, it only means that you don't have to pay tax in respect of it. And oftentimes you also don't need to report it in a tax return. A few years ago, the United Kingdom introduced something called a trading allowance. And under this instrument, income up to £1,000 a year derived from performing services through a platform is exempt from tax. Belgium went even further, and it had a framework which allowed income up to €6,000 a year to be exempt from tax if the income was derived from activities performed through a platform. But the problem with these exemptions is that they really do not address the core underlying issue. Indeed, they do away with the problem of expecting tax administrations to enforce laws when it comes to very small amounts of income. But it doesn't solve the problem of how do we actually collect tax in respect of this income. It's merely a plaster solution. It merely legalizes the non-reporting and non-payment of tax. And in some cases, these types of measures can be quite legally contentious. In the spring of 2020, the Belgian Constitutional Court rendered a judgment on the compatibility of the exemption from tax with the constitutional principles of taxpayer equality and ability to pay. And the court found that this measure was unconstitutional. The reasoning was that if you earned such amounts of income by performing activities without a platform, so outside the context of the collaborative economy, you would not benefit from the exemption and you would be required to pay tax. However, if you performed your activities through a platform, you could enjoy that exemption. So the court found that this measure was unconstitutional and ultimately it had to be abolished. But a measure that is really loved by a lot of states is the introduction of third-party information reporting arrangements. These are measures under which platforms like Uber and Airbnb and other similar ones are supposed to report information about the service providers that operate through their platform to tax administrations. And the idea with these is that if a tax administration has information at its disposal about who these service providers are and how much income they earn, the tax administration will be in a better position to oversee and to supervise these taxpayers, for example, when it reviews their tax returns. So the main objective is to mitigate the information asymmetry that normally exists between the taxpayer and the tax administration. But these types of measures were not always very easy to apply. To give you a very simple example, Uber in Europe is based in the Netherlands. So in principle, it would not be very difficult for the Dutch tax administration to pursue Uber to deliver information about Dutch Uber drivers. But what about the German tax administration? Could an entity in Germany go after a Dutch company and try to persuade them to deliver such information? In cross-border situations, it was very difficult for states to enforce these reporting obligations because they would often not have a meaningful enforceable jurisdiction over these companies. And another problem was also related to the platforms themselves. Uber, for example, is active in so many countries around the world. And if Uber were to comply with a reporting obligation in Germany and another one in the Netherlands and in France and so on, it would create a huge burden for this company, which is arguably unjustified in and of itself. But we recently found a solution to this problem in OECD countries and in the EU. We introduced so-called multilateral third-party information reporting protocols. So what we did in Europe and in the OECD is we introduced multilateral information reporting protocols. And what these entail is that platforms like Uber and Airbnb and other similar ones are only required to report all the information they have in one state, usually the state of their own residence. So going on with the example with Uber, Uber is supposed to take all of the information that it has about all Uber drivers everywhere in Europe and report that to the Dutch tax administration. The Dutch tax administration keeps the information that it needs for its own taxpayers, and then it exchanges any relevant information with the German tax administration, the French tax administration, the Irish tax administration, and so on and so forth. So we no longer expect a company to interact with the government body in another state. We only expect them to interact with the tax administrations in their own state. and any cross-border transfer of information is handled directly by the tax administrations themselves. It also removes this difficulty of expecting one company to report separate sets of information to multiple different states under laws that are similar but ultimately very different and applied by different states. So we found a solution to having these information reporting protocols and to making them be practical also in cross-border situations. But again, we have to ask the question of whether these measures are enough. Again, the only purpose of requiring platforms to report information is to improve the information posture of tax administrations. But tax administrations having this information at their disposal does not answer the question about how this information is actually going to be used. So that is something that still needs to be determined. There's also one last very important type of measure that is taken by some countries. Some countries have introduced so-called withholding taxes. And what this entails is that the platforms which these individuals perform their activities are required to take out a part of the fees that they receive and transfer them to tax administrations as a tax payment. The solution is very nice because in effect, service providers in the collaborative economy are treated effectively the same as an employee when it comes to the collection of tax. Just like an employer takes out a part of your salary and transfers it as a tax payment, you could say that, okay, since a company like Uber handles the payments of drivers and those payments pass through the hands of Uber, you could also expect this company to take out a part of those payments and make a tax payment in respect of it. But there is a very good reason why this measure is not applied in a lot of countries. And it's related again to the difficulties of enforcing these measures in cross-border situations. Again, it's very difficult to expect a platform which is based in a different state to act as a withholding agent. So against this backdrop, despite the fact that these measures could be very, very effective in ensuring that tax is collected on a timely basis and with very limited risks to compliance, they can be very difficult to apply, especially in a cross-border setting. A lot of countries have, of course, tried to find solutions to try to mitigate and overcome this problem. And one of those countries is Italy. Italy introduced a couple of years ago a measure which is widely called the Airbnb tax. And this measure is a withholding tax like any other. So companies like Airbnb are expected to take out a part of the payments received by Airbnb hosts and transfer that to the Italian tax administration as a tax payment. But Italy, of course, had to think about what it's going to do when the platform itself is not based in Italy. For example, Airbnb is based in Ireland. So Italy had to think, okay, do we expect the Italian tax administration to go after Airbnb in Ireland? This would have been very difficult. So in order to overcome this, the law provides that platforms which do not have a presence in Italy are required to establish a presence in Italy in order to facilitate the application of this instrument. That presence doesn't have to be very meaningful. Under the law, it's sufficient to appoint a so-called tax manager, but there has to be some sort of tangible presence that you establish in Italy for the purposes of this law. So at face value, you can say, wow, Italy solved a very big problem by taking a very elegant solution. The Italian tax administration doesn't have to pursue a company in Ireland like Airbnb. It can simply pursue a local presence established by Airbnb in Italy. But of course, there's also a problem with this solution. In the European Union, of which Italy is a member state, we have fundamental freedoms which are guaranteed to companies like Airbnb as well. And relevant here are the freedom to provide services and the freedom of establishment. What these freedoms entail in a nutshell is that a member state like Italy cannot create restrictions on burdens or on companies like Airbnb just because Airbnb is not based in Italy. The only reason why Airbnb in this situation would be required to establish a local presence in Italy is because Airbnb is an Irish company. Had Airbnb been an Italian company, this requirement would not have been applicable in the first place. So what this means is that the Italian law arguably creates a distinction and a restriction for companies that are not based in Italy. The question of whether the Italian measure is compatible with EU law is actually pending before the Court of Justice today. So we don't have an answer to this just yet. We can only take guesses, but based on similar cases that the Court of Justice has decided in the past, it's very likely that the court will find that this measure is incompatible with EU law. So ultimately, where does all of this leave us? We have some measures like taxpayer engagement and education initiatives, which we can apply very easily, but that are not very effective. It's very difficult to argue that they produce a meaningful and direct effect on compliance outcomes. We also have measures like third-party information reporting. So tax administrations have the information that they need, but what will they do with it? We also have measures that would be fantastic if they worked, like withholding taxes, but it's very difficult to apply them, particularly in cross-border situations. So what should we do about all of this? Well, in my view, the first thing that we should do is we should try to make the most of the measures that can work. A good example here are these third-party information reporting arrangements. Tax administrations have this information. The only question we still have to answer is how this information is going to be used. It's quite unreasonable to expect that tax administrations should take an enforcement or a command and control approach when it comes to dealing with Uber drivers or Airbnb hosts, simply because these taxpayers earn small amounts of income, which often make enforcement unjustifiably expensive, and also because there's simply too many of them. The volume of taxpayers is quite high. So what instead we should do is try to think about measures that could be taken by tax administrations to commodify the information that they use. For example, by using it to provide pre-populated tax returns to these individuals, or to optimize the way it's used in risk modeling activities. But the first thing that we need to achieve in this respect is we should change the viewpoint that we have towards information reporting. I mentioned earlier that the main purpose of these instruments is to make sure that tax administrations have information in order to be able to supervise tax whips. But what is required is a paradigm shift. We no longer need to see this information as something that we can use to take enforcement action, but also as something that can be used in order to help manage tax compliance. But that is still a bit of a paradigm shift, which needs some time in order to be able to materialize. Another thing that we should do is we should try to think about ways in which measures that could be very effective but don't currently work could work better in practice. I told you before that, or it's fairly obvious from my commentary, that withholding taxes could be a great approach to securing the collection of tax in respect of income derived by these workers. But they are difficult to apply because of the platforms, because platforms are active in many countries, oftentimes without having a presence in those states. So what we should do instead is we should try to perhaps ask, could we ask an entity other than a platform to act as a withholding agent, an entity which is more likely to have always a presence in the state of the service provider himself? An example could be a bank. This could potentially be quite easy, since the payments that are received by the service providers are generally handled electronically. So maybe we should also think, like the OECD recommends, about a broader view of intermediaries beyond platforms themselves. Another thing that I think should be done is we should work together internationally. A lot of countries in Europe and outside Europe, and within and outside the OECD, have come up with very different approaches to address this issue. But the truth of the matter is, some measures are in reality more effective than others. So perhaps what is needed is more talks between states and more exchanges of experiences with different types of measures. Because if we have these exchanges, we have a better idea of what works well in practice and what doesn't work that well. And as a result, we can have best practices that emerge. And perhaps such best practices could also be replicated in other countries as well. And finally, I also think we should take a principle-based approach. In my view, this idea of compliance by design should guide our view of how we take measures to address this issue. I don't think there's much point in wasting resources on measures that cannot produce a meaningful effect on tax compliance, but instead we should focus on those measures that produce direct consequences on how much tax we are able to actually collect. And this was all I had for you today. Thank you very much.
Thank you very much, Alice. I see that there are two questions, and I'm sure that's coming from those looking in via Zoom, so you can see it on the board. But maybe we should read it. Is could collaboration between the tax departments approaching companies like Airbnb to where a tax compliance certification can be granted and showcased on the page of the individuals making use of these platforms, to where not having such a certification from tax departments would lead to consequences for them on the platforms? So think on the Indeed background, for example, how Airbnb tries to get to it. Maybe you can answer that one.
I think this is part of this broader idea of trying to cooperate between platforms and tax administrations and to nudge taxpayers into compliance. But still, I think rather the idea that giving a certification and putting anyone in a box as compliant or non-compliant, I don't think that's necessarily the best approach. I think what we should focus on instead is take measures that are simple, that are not overly personalized, just like we don't have overly personalized measures when we think about employees, and simply focus on what we could do to collect tax in a timely, speedy manner.
Thank you. Are there any questions from anyone here in the room?
Questions or comments?
Comments are welcome.
Yes. Coming from the tax administration itself, I was the web speakers, the head of the tax administration. And these are items and headaches that we are confronted with on a daily basis, yearly basis, monthly basis. We have talked to Airbnb, we have talked to people in charge of the platform, and we do see the hiccups when it comes to having an agreement in place with the service providers such as Airbnb to provide information to the tax administration. So they are really saying we're not based in Aruba, just like you said, we're not based originally in Aruba. We will not be providing any information of the people in Aruba renting out houses or a room in their house via our platform. So we were back to square one. But I think that the reporting, that's really a new information reporting, third-party information reporting, and even the multilateral information reporting is something that can really help out the tax administrations in collecting the revenues. Because the tax administration is really, their focus and the vision is to collect more taxes or to collect taxes from people that should pay taxes and not by, enforcing it in a way that people will be scared to pay their taxes, but facilitating them to pay their taxes. Yeah. So the information received via a multilateral reporting information and then repopulating their income tax return would really surprise them, would have a holistic approach or a new approach to paying taxes where they say, hey, the tax administration just sent out a form where they had information of my income and I should be paying, an X amount. So it was really, I think, for us, a new information that we can work with. Yeah. Thank you so much for sharing.
I completely agree with you, and I think pre-populated tax returns are a big part of the solution here. It's obviously not a perfect solution because it depends from one taxpayer to another. I also know that tax administrations have different approaches to reviewing pre-populated tax returns. I also know in some countries it also depends on the timing at which you submit the tax return. So the closer it is to the notice period, the less likely it is to actually be reviewed. But it is a part of the solution, and I also think it's part of this emerging paradigm of having a tax administration that is concerned with helping and servicing the taxpayers as well. But from a policy perspective, because this third-party information is relevant and it can be helpful, it also has a proven impact on the reporting behavior of the taxpayers themselves. Of course, there are also some empirical studies which show that, okay, you will be compliant in respect of the information that you know is reported about you, but you will have an exacerbated tendency for non-compliance in areas where there's no reporting, for example, expenses. But at the same time, overall, the effect is a net positive. The one problem, though, is the discourse of international organizations, more so than tax administrations are doing. In the explanatory memorandum to the multilateral instrument that we have in Europe for information reporting, the European Commission's approach was to describe that by having this information, that's sufficient. And there is no actual guidance given, okay, use this information a certain way. Most tax administrations will do that, but I do think we still need a tone at the top here. And since these measures do come from international organizations, there should be an onus on them as well to give this tone at the top.
Any other questions, remarks? Let's see if there is anyone by Zoom. So someone said, congrats, well-explained presentation on your topic. I want to share the following thought with you. End goal should be to create sustainable and successful enterprise adapting to the future of work, employment, and ensuring consumer empowerment incorporate machine intelligence, AI, and the principle of decentralized controls. Would you like to give any remarks?
I do agree, and I do think that a big part of this is providing resources that facilitate the automation and the optimization of compliance frameworks.
I think we.
And they cost a lot of money.
They do, yes.
Automation and vision.
They do, but they also cost money for these platforms. And you know, you mentioned that you try to communicate with Airbnb. I know I also refer when I try to explain this. Okay, think of Uber and think of Airbnb. But the truth of the matter is, this is not an oligopolistic market. It's so easy for these companies to emerge as startups and to grow very fast. Because before we had these multilateral instruments, a lot of countries said, okay, if I can't enforce a law against, let's say, Airbnb, how about the tax administration concludes an agreement, a voluntary agreement with Airbnb? Because then you make a covenant there, you commit to that yourself, and the risk for non-compliance is potentially lower. But at the same time, you have an agreement with Airbnb, but do you have one with the VRBO, for example, or another similar platform? So that's also
and they can act as withholding agents, just like you said. That is one of the options. But they say, well, okay, we're a withholding agent, for example, the turnover tax. But you cannot audit us for the completeness of the taxes that are remitted, because we are just only withholding agents. So you should be, auditing those that are making use of our platform.
Yeah, and then there's, I only focus on enforceability for this talk, but there are a lot of other problems as well, such as how should that tax be designed? Some of these activities, like Airbnb renting, is very labor intensive. You don't have to go out of your way to provide something like a hotel service with a lot of accessory amenities. But other activities like freelancing are very labor intensive. So if you do apply a withholding tax, what rate should you apply? And how should you differentiate there? And then if you do have a withholding tax, should it be a final tax or should it be an advance payment? If it's a final tax, you run the risk of having arbitrary winners and losers. And if it's simply an advance payment, a non-final tax, you will still have all these taxpayers filling out tax returns and potentially requesting refunds. So the backlog is not eased for tax administrations, unfortunately. So no easy solution, in my opinion.
Yeah. I see there's a question, maybe Luann will be able to answer it, but it says, do you know how Aruba is tackling the Airbnb and such kind of development and use on the island, such as special and or simplified forms for these with a relevant toelichtingsformulier?
Wow. Yeah, we try a lot of, and it's great to know and to have a presentation like this and to know that we are on the right track when it comes to changes in the Aruba tax administration. So when it comes to voluntary compliance, when it comes to giving out information to our taxpayers, we put a lot of effort into that. We do have a low, let's say, very informal way of talking also to people in charge of platforms. For example, management companies that do manage condominiums in Aruba. We do want them to organize themselves and to be a partner, a stakeholder that works together with the Aruba tax administration. the way that we are now tackling the compliance and making sure that everyone pays their fair share in taxes is really using the data. For example, using the data of IASA, where the tourists will check off whether they're staying in a hotel or an Airbnb or another address. We will then match that with our database and making sure that they are registered, making sure that they're registered for the income tax or the turnover tax or tourism levy. So I think digitalization and having those multilateral reporting information in place with other countries and within your own country will really make sure that everyone complies and everyone pays their fair share. And I do have digitalization is very close to my heart, and I do see that we need to be on a different level when it comes to tax administration. Of course, you have tax fraud. Of course, you have the non-compliance in certain areas and entrepreneurs that you would really have to enforce penalties, the hard and make sure they see the hard face of the tax administration. But other than that, we do have a very important role in facilitating tax payments, facilitating taxpayers to submit their taxes with less effort possible. So we have, for example, right now, a digital platform for monthly taxes where they can be filed online instead of paper form, standing in line, just to get stamped like the old ways, So we've come a long way. We're not there yet, but it's good to know that we are on the right track and we can improve, always improve.
Yeah. And adding to that, someone did say indeed the toelichtingsformulier being available in the common for language, often used on Aruba, do help out a lot with filling out things like income tax forms. So it's recognized within our community. So based on that, I'd like to thank everyone in the room and for those of you joining on Zoom. It was quite a large amount. As I guess, if anything, I'm sure they'll be free to contact you.
Absolutely, please do.
And this webinar will be made available online for those of you who would like to look back and reference. And if anything, send an email to the Center for Lifelong Learning at cll@ua.away. And we look forward to having you attend one of our other presentations online or here face-to-face with mandatory masks. Thank you and enjoy your lunch hour, I would say. Bye-bye.